traders. This is Blake Morrow. You are listening to the Morning Edge webinar, so I want to welcome you all back. Sorry, I'm just cracking myself up. Anyway, so let's get through our analysis, and we're going to go to the euro dollar, and yes, and try to figure out where the hell this thing's going. I've had an order sitting for like the last couple of days around the 113.65 level. I drew this for you guys yesterday. You can see it right here. I was like, man, if we can get a rally back to the 38% retracement, right? I'd be a seller up there. Well, I've had an order sitting up there since 2 days ago. So, oh shoot, I didn't want to do that. So, are we still dealing with the same thing? The answer is yes. And matter of fact, let me get rid of this 200-day moving average, or 200-period moving average. I don't want that there for right now. If you look at what we're developing here, okay, we very easily could be, and I'm hoping this is the case, copy, paste, hoping that we are developing some sort of flag pattern, which very easily could be, that looks something like this, okay, which still means that if we get a rally, let's say it's a bad ADP report, we still get a rally up here. So I'm still hopeful that we can do it. Now, here's the problem. If you're a Euro bull, this is a problem. How about if it's a good ADP jobs report? Yeah, exactly. So you may be thinking, oh man, I'm long the euro dollar. I'm gonna get bailed out here. This is great. I'm gonna be able to get out when it rallies back to 113.65. Yeah, don't just assume that's gonna happen, because we could have a strong ADP jobs report. We can print a 250K number, and the euro is going to slip right through this support. Okay, now let's talk about that support. Where is it that if you're long the euro dollar, where do you scratch it and go, oh shoot, I don't want to be long anymore? It's right there, in my opinion. Okay, 112.30. A break below 112.30 is bearish. Okay. One 12:30. Joseph says that flag looks like a banner is in danger of becoming longer than the pole. Perhaps it's no longer valid in the euro dollar. Well, that is about, I would say this here. Let me just, shoot, wrong pen. Hold on, grab the wrong color. Let's go black. Okay. This right here, the flag, that's less than 50% of the pole, okay? That's probably close to 40%, I would say, okay? Still valid. If it works out much longer, like if we do this and this, that would probably be it. If we don't break from there, if we don't do that, then it's not valid. But right now, it's valid, Joseph. It's valid. Worst case, flag or no flag, that support's really key today for bulls. We break through 112.30 and we get a sustained break below there. Yeah, I don't think I'd want to be long. And I'm long the euro pound. So this, I'd hope at the same time the pound's trading at 151.80. Because this scares me too, being long the euro pound. Okay, resistance, still, I know we're here, but resistance comes in at 113.30, maybe 113, obviously 113.65. So I'll go 113.30, 113.65. Okay, bias is still a range environment. Let's go into the cable. So here's the pound. Now, construction PMI came in worse than expected. We slipped through this little channel that we had going on, which was not trying to get rid of this thing. Hold on. Okay, there we go. So here's the cable. We're drifting below the 127% extension. The cable obviously looks bearish. We have the construction PMI numbers come in worse than expected. We're quickly approaching the 161% extension, which is also this I had drawn all the way across, but you know this also coincides with that horizontal support. Now, Paul said, he said there's a 50% retracement from the low to the high, comes into play around 152.50. So, with that being said, respecting that 50% retracement, that is some support. Paul pointed that out this morning. Okay, 152.50. Now, if we break now, obviously we'll have to watch the ADP, because let's say the ADP is strong. If the ADP report is strong, we could break right through that 152.50 while we're sitting here. And if that's the case, then 181.75, 180 is the next stop. The cable looks weak, guys. It does, and we're coming out of a range environment. We may be turning bearish. I mean, it's hard to. It's really, in my opinion, it's pretty much a bearish trend as long as we're below this 153.50. That low, 153 and a quarter. Now, wait, hold on real quick. I'm on a daily chart. Let's go over to a 4-hour chart. The low here, 53.37, 153.37. Spike high here is 153.48. We have this, big support over here. So I'm going to say about 153.40. While we're below 153.40, it's bearish. It is. I mean, it's just the cable does not look healthy at all. Okay. Let's go over to the Swissy. Now, I'll say it, the stupid Swissy. I'm not long. I'm very upset that I'm not long right now. I'm upset that it's not dipping, which I'm hoping it would. That doesn't make it okay for me just to run out and start buying it either. A lot of trades, I miss them. They slip past me. The market doesn't always do what I want it to do. As a matter of fact, the market very rarely does what I want it to do. Sometimes it does what I plan on it doing, not always what I want it to do. But I try to plan for things to happen, and and if they do, that's great. Then I'll take advantage of it. And a lot of times they don't. And the Swissy has been one of those trades that I'm like, same with the euro. Like, I really want to short the euro 114, 113.60, 114. I want to short it a couple different places. I look at the Swissy. It's like, I'd really want to buy it at 194 or 195. I just don't know if that's even going to be possible, and it's irritating to me that it's not pulling back. It's strong, guys. It is. All right, so right now, if it's a weak number, do we make it all the way down there? That's a problem. 95.75 support, resistance 96.75, right? 96.80. That's spike high, but I mean, 96.75, 95.80 if we get lucky. Okay, it's range environment, but damn thing's not backing off either. And you know, this very similar to the euro. I mean, we can just be flagging like this too. You know, just as you guys are looking at the euro dollar and going, wow, you know, that looks, you know, looks like it could, you know, could really continue to sell off. The Swissy looks like it can continue to rally here. Okay. All right. Let's go to the yen. So, like I said, I shorted the yen at 120 last night at 120.35 and 120.40 when we were up here. We went as high as like 120.42, I think, when we spiked up 46. I was sitting on a conference call and I was just shorting the dollar yen last night as it spiked up here. I was like, that's a bunch of BS, you know, just selling into strength and you know, put in my limits at 120 and just got taken out. It went, and even while I was awake last night, I went to 119.92 or whatever. Okay, so it slumped. It went up here. I was shorting it, came all the way down here, and I got out before I went to bed. And then, you know, obviously we've been chopping around, but the dollar yen, as long as we stay below this here, let's remove this one right here. As long as we stay below 120.50, okay, it's bearish. I mean, here's the, you know, as long as we stay below this 120.50, it's still bearish. Remember, we came out of this is a very bearish move. We're being supported now, right now, but I don't know how long that's going to last. You know, it depends on equities, obviously. But 120.50 is resistance today. So if we make it back up there, I'll probably short it again, frankly. Okay, I still think this is bearish. Now support, we've been as low as 119.20, so that's going to be support for today. Okay. Let's go to the dollar Canadian. So this Canadian, here's the thing. If you guys are really bearish the dollar Canadian for whatever reason, I can't understand your thinking why you would be bearish the dollar Canadian, but let's just say you are. You're like, you know, dollar Canadian, it's never going to go higher. This is it. It's peaked. Although it's at, you know, 11-year highs. It's peaked. You know, it's never going to go higher than this. If that's your attitude, fine, so be it. If you really want to be short the dollar Canadian, I would do it right here at 133. That's the place to be short. Not here, not here, not here, not here, up there. Okay. But if we break above this, you know, 133, let's say 10, look out. You know, I think a lot of shorts got out of crude. I think a lot of people got long crude. And if inventory data comes out strong, you know, if the inventory data comes in strong, inventories are building, this dollar Canadian can rip higher, and crude oil can come right back down because so many traders got long crude oil. So many. And so many shorts got squeezed out that I think a big reversal could be, you know, that's the market for you. Bottom falls out of crude, dollar Canadian rips to 136. Toy screws everybody. Okay. Ron made a good point yesterday. He goes, yesterday's API on oil was $7.6 million, 7.6 million barrel build in inventory. Goodbye, Caddy, if that's consistent with today's report. Good food for thought, Ron. That's from Ron A. So Anyway, 133.10 I think is really critical resistance. 133.10. This is still bullish. Okay. Now dips in the and this we drew this out because we were mid-range yesterday. I mean, look, the Canadian GDP came in stronger than had expected yesterday, and the dollar Canadian dipped and ripped. Now I sold my dollar Canadian yesterday. When it dipped, I didn't buy more, but when it came back up to 131.90, I sold it. Okay, so I got out. Because remember, I was buying it at the DMV the other day when we got to here. So I got most of it right there, sold most of it right there, basically. Um, I'm not in the Canadian anymore. The question is, where would I buy it? Well, I'd want to buy it down here. I just don't know if we're going to have that opportunity. We have a weak ADP jobs report. We slip back below this low of 132.15, might be in the cards. That support today. Okay. Let's go over to the Kiwi. So here's the Kiwi. Holding, 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 holding support. Support's at 63 cents. If you want to buy the Kiwi, 63.10 actually, you want to buy the Kiwi, there's your risk. Okay. Now, if you're buying, you're just making the assumption that we're going to have a weak ADP jobs report too. But let's say post jobs report, if you want to buy the Kiwi, that's your risk. Below 63 cents, it's, you're probably going to see some stops get triggered, just like the Aussie. Okay. Now, resistance, I mean, if you look at the Kiwi, we've been pretty consistent with making lower highs. Okay, and while we're below 64 cents, it's still bearish, but we have the opportunity today, of maybe making higher highs. So 63.70 be resistance today. Here, 63. Okay, those are your two resistance levels. Still bearish, but maybe we can, pull out of this bearish nosedive that we've been in the Kiwi, perhaps. We'll see. Asking a lot, in my opinion. Let's go over to the Aussie. Now the Aussie, nonstop bloodletting. Okay, I don't. Here's the thing: I don't see any support in the Aussie. I really don't. It's like I don't know where support is. Is it bad to say? Is it wrong to say? I mean, look, this thing can't get a break. It really can't. Take the spike low from last week to the high here, the spike high afterwards. 127% extension comes in here at 96, or excuse me, 69.70. Maybe that's support. But this thing is so ungodly heavy. It's crazy. GDP last night disappointed out of Australia. So just weighted down again. So right now we have resistance at 70.60 and support at 69.70. It's bearish. What can I say? It's just bearish. 69.70 is support. And resistance is Resistance is 70, 60, right? 70, 60. I just need to make sure that. Yeah, 70, 60. That's resistance. And it is bearish. Okay. Now, let's go take a look at the dollar index. So here's the dollar index. We got to watch the dollar index because, you know, we were talking about the euro as a possible bear flag. Well, just as much as the euro is a bear flag, the dollar index is a bull flag. Okay. That's why if we break above 96.30, it's going to be a breakout. That's key resistance because that's previous support, current resistance. It's there, right there. Okay. Now support is, we had written down at 94 or 95 cents. That continues to be support. We're in a range. Let's go, while we're here, let's go look at the peso. And I haven't even looked at it today yet, so there's the peso, relentless. It's relentlessly bid. %50 retracements holding. So 17, 1665. ADP could move this one. That's why I'm going to write it down. 16, for those of you that can trade at 1665. 17. And it's very bullish. Anybody wants to tell you otherwise that it's not bullish, just look at that weekly chart. It's bullish. Okay? All right, guys. When I come back, we'll do the Norwegian krona, Swedish krona, see if there's anything happening there. And then we will get ready for ADP, and I'll answer your questions. Don't go anywhere.